Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. The 6th of July 2015. As the markets take into the effects of the no vote that has come up or that has emerged overnight from the Greek referendum, markets are extremely choppy to begin with, right from opening. Now, this is still very much an initial reaction, a knee-jerk perhaps to what we saw coming up from European market or European politics overnight with regards to the Greek vote. Now, everything remains still really unclear, but the initial reaction is obviously a sell down and get out of risky assets, as we have started to see or as we saw early this morning. First things first, the Nikkei had the first benefit together with the Australian 200. We saw big markdowns. The Nikkei opened down as low as 20,000 to hit a level of 20,220 or so, but has since managed sort of a bit of a rebound, looking to settle around these levels 20,230, 240 or so. Now, a key reason for this rebound has been obviously the overreaction to begin with, but it still also remains to be seen what the European markets that will take very much the lead will probably represent later when they come on in the afternoon. A good perhaps product to look at is perhaps the VIX. The VIX or the volatility index clearly is a reflection of where volatility, especially downward volatility, is concerned. We saw this big pop-up and we are seeing that pull back down. Let me just pull out a perhaps 15-minute chart for better representation. Likewise, we saw it opening very strong up, which highlighted the fear factor coming in before pulling back down, easing, as we have seen, like I pointed just now, the Nikkei, for example, rebounding. This has actually pulled back down. Now, it will probably hover around down here until further indication comes out from the European market. The reason why this is all still confusing is because with that no vote overnight, nothing has been resolved. Nothing from the standpoint of Greeks, $300 or so billion worth of debt remains still unaccounted for in terms of how the payback is going to be, what sort of a haircut there will be, whether Greece as a result of this no vote will be thrown out. If they do, how will they be thrown out, and what sort of impact this will have on Greece, and more importantly the overall economies of or the other remaining economies of Europe who remain under the care of IMF and the Troika, and who also are starting to lean towards the left side of the left side of politics. But essentially, from a market's point of view, with all that uncertainty in terms of where the DAX will trade, where the German Bund will trade, for example, those are and the euro dollar for that matter, where they will sort of trade. I think VIX is probably one good product that can more or less be representative of the volatility. The other thing I wanted to also mention is China. China opened up actually very strong. Trading a high of up 7% at one stage, trading a high of 12,221. This is the A50s, of course. This is on the back of several measures that have emerged from the US, or rather from China, over the weekend, which suggests that two things will happen. One, they will suspend the IPOs or further IPOs going forward, at least momentarily. And two, the group of independent brokers, about 20 of them, have lumped together, put up a sort of a rescue fund, if you may, of around 20 billion that will support the market, and they have also pledged to not sell the market anything below the 4,500 level on the CSI. The CSI, incidentally, as we speak, is currently trading around the 4,000, just above 4,000 sort of level. Now, as a result of that, what we are seeing is that we are seeing a little bit of wind coming back into the market, and essentially we saw a big pop-up down there. Still very early days, but at least this is a nice reversal from what we have seen the last 3 weeks or so, or 2.5 weeks or so, which is almost a 30% sell down. Finally, the Aussie dollar. I mentioned something in my morning note this morning. Please look up for it. After that break we saw on Friday of the 76 level, it has gone one way down. Now, the big drop today may have seen caused by the nervousness behind Greece, but what we have going for it, where Aussie is concerned or where Australia is concerned, is that we have a big RBA meeting tomorrow. If you remember, A week and a half ago, we saw the Chinese authorities or the Chinese central bank cut rates. Earlier in the month, in June, we saw New Zealand or Bank New Zealand cut rates themselves. Now, this will definitely cause some pressure for the RBA to actually move. If they do so, this is against market expectations of a flat or of a no move. Whatever it is, this psychological level has been broken, and we have argued that it has always been a very long, heavy sort of bet. With this breakdown, we could see an accelerated down. The next level for support will be around the 73.5 level down here. If this thing does rebound, this psychological level of 76 becomes then a resistance. But it's something to follow because it's actually moving, and it has scope to actually move quite a bit more. Besides that, thank you very much.